You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to, watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, Case-Shiller report. Are banks still lending? Can you get a mortgage? Can you get a loan? Can you get a credit card? And from whom? Is there only 4 banks left that are making loans? Our good friend with us, mortgage expert, noted expert, Debbie Bloyd, is with us now. Debbie, great to have you back. So the mortgage maven, the money maven, what is going on in the space here? Can you get a mortgage? Can you get a loan?
I have got 5 loans on my board right now of people that are buying houses, people that are doing cash out refinances and taking that money and buying a new primary. So I'm doing loans all the time. So that hasn't changed any. If you are going to brokers, so I'm a mortgage broker. We have lots of channels open. We have lots of lenders available. Maybe the big banks, they have clamped down on some of their lending, but since I'm not at a big bank, I'm still in business. It all goes based on your down payment, of course, and your credit, but we're still getting FHA loans for people with 650 FICO scores. So a bunch of the news is just not right.
Well, I'd loan money to somebody with a 650 FICO score if I could get the government to guarantee it too.
Yeah, of course.
So, but the 650 FICO borrower of today is way, way different than the 650 FICO score borrower of, say, 15 years ago.
Oh, sure. But there's same problems, Kerry. Divorces, people not getting off each other's credit, bankruptcies, foreclosures, paying kids' debt off, repossessions of cars. All that is still alive and well. So everybody has different stuff on their credit. I had one girl that was on her dad's credit card still from college. It looked like she had a ton of debt. No, she just needed to be taken off his credit card. She was just a signer, but all that debt transferred over to her. So yeah, you just have to be able to keep up with the credit and know what's on there. Student loans are a big dilemma right now because a lot of people have a lot of money in student loans. That still counts. It counts for half of what it used to, but it still counts. Just because it's deferred doesn't mean I get to defer it.
Still counts. So basically, though, the liar loans and the all those loans of the past, the stated income loans, those are all in the past now.
Well, we've got some loans that are semi-stated now. They call them different things. There's a DSCR loan that you get the loan not based on your profit and loss and your taxes, but based on the rental property that you buy, will it cover the principal and interest, taxes, and insurance of the note? And as long as it's more than the note, you get the loan. They don't even consider your tax returns.
Really? Well, what kind of rates is that company charge?
Well, so a normal primary residence rate is probably 6.7 right now. Those DSCR loans, so you've got an investment property, that makes it about a point higher, and then about another half a point because you're not giving me a lot of disclosure information and taxes. So you're looking at 7.9, 7.5. Not so bad considering, what it could be.
So, and that's mainly for investors then.
Yeah.
Because you got to have cash flow. Will they loan on Airbnbs?
And it's not considered an Airbnb. It's just an investment property. So nobody classifies it as that when they buy it.
Oh, interesting. Huh.
Yeah.
Really
yeah.
Interesting.
We have things called bank statement loans, which are semi-FIBR loans for business owners, but we are considering the amount of money that they take in on those bank statements. So we are getting proof of some kind. We're just not getting proof of all the expenses and all of the write-offs.
We call that almost like a cash flow loan. You demonstrate your cash flow and, then they'll...
You get about 70 to 80% based on, depending on what your business is, of that money that you show on your bank statements. So if you're self-employed, that's a great loan to get.
But maybe this is an opportunity for enterprising mortgage brokers like yourself to expand your market reach, your product offering.
Yeah, because a lot of people have gotten out of the business, Carrie. You know, I can't tell you how many people are looking. They used to be underwriters, they used to be processors, and they're out of business. You know, you don't need 20 processors if the loans have dropped. I mean, I was doing 10 to 12 loans a month and I only have 5, and I'm still out there hustling. So
what do you think about AI, the banks using AI on the back end to handle all the underwriting and all the analysis?
well, you know, we have been using something called AUS and LP, which is the underwriting systems that we've used for years, and all the brokers use it. So it's kind of AI, but people still have to sign off on the files. People still see everything, have to check the boxes. But that's what I've always said, if the computer likes you, you're in. But the computer checks your debt to income, but the computer is only as good as the information that I've entered. So if I enter bad information, sure, the computer's going to approve you, but when it gets to a person, they'll deny you. I had this happen yesterday with a lady. I was shopping for her investment property mortgage rate, and her rate was maybe 7. And that was with tax returns and everything. And she's like, I went to Chase and I got it for 5.8. I'm like, that's not the rate of an investment property. And she's like, well, I didn't tell them that. I'm like, I said, ma'am, you know, you're going to get caught. And she goes, they've already locked my rate. And I go, they can certainly unlock that rate and they move you to a different category when they find out it's an investment property. And she goes, no, I'm locked. And, you know, we just refused. And I finally told her agent, I said, you know, I'm done. She doesn't understand what I'm saying. I'm not going to jail.
Want to understand it. She doesn't want to understand what you're saying because you're not telling her what she wants to hear.
Yeah, well, and the person that takes the loan information could be an intake person that just asks the question and writes it down. They don't process, you know, it's like a kindergartner. They can process the words, but a high schooler is going to interpret that, right? So someone that's the loan officer, that's the broker, that's the underwriter, still got to have to interpret that and use proof. So she won't get that rate and she'll be mad, but she did it to herself.
You know, it's like someone once told me, you could teach a monkey how to play Mozart, but the monkey is not going to know that it's playing Mozart.
Right, right. And so the people that intake loans, you're only as good as, it's kind of like, you know, your health. You're only as good as the doctor that you go to, or you're only as good as the dry cleaner that you send your clothes to. Not everybody's in the top tier.
I don't like my dry cleaner. I'm in big trouble here, and forget about the doctor. I got to find new people. So
not everybody is created equal. And I think people don't understand that. And yeah, anybody can just give you information. But when it comes down to it, will that loan get approved? And it won't if the information is incorrect or fraudulent.
Yeah, it's this entitlement mindset that people think they deserve because they're who they are. You deserve a mortgage, you know, about the fact that you're like you're 580.
Oh, yeah. And I say, you know, you're not entitled to a house. That's not part of the Declaration of Independence or anything else. You know, you have a privilege of getting a house. And a lot of people, that's their main goal, is to get a house. They don't feel like they're doing right unless they get a mortgage. But based on their job history, I just had a guy that left his W-2 job to become self-employed. And I said, now you can't get a mortgage for 2 years. He's like, well, why didn't anybody tell me? I said, who did you ask? You know, and they just do things and they don't understand the ramifications of their actions, for sure.
Yeah, sure. Well, because you want to believe, everybody believes what they want to believe in the final analysis, Debbie. And if you want to believe that the world is flat, you know, you could have pictures. They could send you up on a space capsule and you could go around the world. But if you still want to believe it's flat, you'll believe it's flat.
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah. So yes, there are mortgage lenders lending. I'm still lending. And there are still people trying to get mortgages doing crazy things, and they're not going to get loans. So it depends on who you ask, and it depends on what your circumstances are.
I totally get it. Hey, so strength of the market, you said you're working on a little less than half the deals that were a few months ago, but back then that was abnormally high volume that, since the pandemic, right?
I've done about 10 loans, 12 loans a month since I've been in business for about 26 years. So for me, I work harder when those numbers when the market's slower, I work harder. So I try to keep it at level, but there's just no way. I'm going out every weekend, talking to real estate agents, sitting in open houses, and still we are slow. People are not pulling the trigger. They think that the market is suddenly going to drop by and be back down in the 4s, and that's just not going to happen. So they may find themselves renting for a long time. You've got to pull the trigger. You just sitting on the sidelines is not going to make you anything but a renter.
Yeah. Well, everybody's situation is unique and different. So,
Yes.
Everybody's got their own take on what's going on, what's happening, but definitely has slowed down, huh? And
Yes.
even in markets like Texas and Florida.
Yes. Yeah, of course. And people are kind of gun shy. They don't. I had a girl that I had to show property to tomorrow, and I put on my real estate hat for that. And she is, looking at properties that have been on the market 60 days because she thought that was safer. And, as soon as she looks at them, they sell and go under contract. So I don't know that there's any method to the madness.
Yeah. Well, when stuff takes longer to sell than it should, unless everything's taking that long. But when something's taking too long, then you got to start thinking what's wrong with it, right?
Yeah, you always want to know. Like I have a house that I've got a friend sitting in, and she's sat in it for 3 months. And the problem is the house is too big and the lot is too small. And you can't get past that. That's not a paint job is not going to fix that. Lowering the price will fix it. Someone will buy it eventually.
Yeah, well, the old saying, there's a seat for every ass and an ass for every seat, right?
Yeah. Somebody will buy that house. It's going to take the right person. It's got a small yard, and most of the yard is pool, and a lot of people. And it's funny because on the sign in the front of the house, but when she has open houses, the sign says pool and golf course lot. And when people walk in, they're like, oh man, it's got a pool.
Let down. Huh?
Yeah, it's on the sign. It's got a pool. So
it's funny. In Florida, the worst house you can try to sell is a 4-2, 4-bedroom, 2-bath.
Really?
Yep, it's the worst house.
Why? What's wrong with that?
It's missing a bathroom. It needs at least a half bath. All right. Otherwise, it's a really badly conceived, for lack of a better term, house.
It doesn't flow correctly. Right.
Because if you have kids, then you got one bath for the kids, right? And even if you don't, it's just where the bathroom's placed in the house, all of that. It's bad design. Normally, they say, well, it's really a 3-bedroom, 2-bath with an office. But everybody looks at the office as it could be a bedroom as well. Worst house in Florida. Yeah, if you've got 2 people, probably not going to matter. And if you got a pool and you don't have the extra bath for the pool, that's another strike against you there. So.
And you would think that now there's a lot of multi-generational families trying to live in homes. So they want 2 bedrooms downstairs. a lot of people put the owner's suite downstairs, but all the rest of the bedrooms are upstairs. Well, that's not going to cut it for grandma. So they're on to the next house. So they're looking, a lot of families now are looking for a 1-story house. And at least in my market, there's a ton of 2-story houses. Almost everything is on a small lot, big house. And when you get into the mid-millions, $1.5 million, now you get a decent sized lot. But if you're trying to stay under $1.5 million, you're not going to find what you're looking for.
Yep. Understood. Yeah. Or you got to move further away from wherever it is
that's it.
Commuting to, right? Everything's straight off.
Yeah. Yep. Got to live further out.
And I guess when prices go up or rates go up, then the number of trade-offs you have to be willing to make to get that house also increase.
So I had a gentleman that I was almost to the closing table and got into a disagreement with the seller, and he walked away last year. And we told him not to walk away. Just get over it, move in the house. It doesn't matter if you guys fight or not. Just get through it, because it was a $950,000 house and his rate was 4.5. So he finally closed on a house a couple months ago. His rate was at 6.5. And it was a $600,000 house. So was that throwing a little fit worth a $300,000 difference in what his buying power was? His family suffered. Yeah.
In the end, house is just a box, right?
It's just a box. Yes, it's just a box.
Don't get attached to it and don't get emotional about it, because there's always another box, right?
Well, so many people are looking at interest rates the same way. They're like, well, some of these reports are really misleading, Carrie. They say, oh my gosh, the rate went down 1/8 of a point and there are 400 more people signed up for mortgage applications this month. What? Well, no, because they still have to find a house. I've got lots of loan applications on my computer. That doesn't mean those people are buying. That just means that they want to see how much they can buy in this market. Then they go out and look what they see that's not acceptable for them, where they want to live. They're just going to rent or whatever. So there's a lot of people milling around out there that technically you're right. They should buy. They could buy. They choose not to buy. But it does not mean that there's 1 million people buying it just because the rate went down 1/8 of a point. Most people don't know what their rates are anyway. And it fluctuates so much from week to week. I'm trying to lock them in once they find the house at the best rate that's available at that time.
Sure, of course. All right. Well, so your guess here, the banking crisis, everything else, rates peaked? Are they heading higher or are they going lower?
No, I think they're going to stay the same or go down a little bit on any given day. If like the bank problem news did make things spike for a couple days and it made everybody stop. But then it picked right back up. I mean, the people that I have that are looking for homes, since they're not using either of those two banks, they don't really care. I'm a broker. I still have money to lend. I still have open lines of money. So if that stops them, they weren't really that serious.
All right. Well, I think that pretty much sums it up. If the current environment is stopping you, then you weren't really a serious buyer in the first place or a serious seller. And Debbie, where is the best place to find you? How do we connect with you on the web?
So I have a website. It's moneystrategieswithdebbie.com or dlbmortgageservices.com. And now I'm on TikTok. I'm getting a lot of business off of TikTok, of all things, Carrie. You need to get on TikTok, man.
All right.
You need to get on TikTok.
All right. TikTok. That's my next frontier. Hey, if you got a question, Debbie, you got a question for Debbie, shoot me an email, kl@carrielutz.com. We'll get you an answer. And you can always click through to her site on financialsurvivalnetwork.com. Just click through and you'll get to Debbie's site. And while you're there, sign up for your free newsletter. Debbie, always a pleasure. You be well.
Thank you. You too.
Thanks for listening to Carrie Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.